On Monday, the US dollar index rose 0.1% at the end of the New York session, reaching 103.64. It experienced a decline of nearly 0.5% last week, marking the largest weekly drop since mid-April. The euro remained steady at 1.0753 US dollars, rising 0.4% last week, which was the first weekly gain in approximately a month. The Japanese yen fell 0.2% against the US dollar to 139.61 as the Bank of Japan prepared to hold a policy meeting. According to sources, the Bank of Japan expected to maintain its ultra-loose monetary policy this week and project a moderate economic recovery. This is due to strong corporate and household spending offsetting the impact of slowdown in overseas demand. After raising interest rates to a more than 14-year high of 5.5% last month, the Reserve Bank of New Zealand signaled that it had completed its tightening policy actions, ending its most aggressive tightening cycle since 1999. This caused the New Zealand dollar to plummet by 2.7% in May. The New Zealand dollar fell 0.2% at the end of the session, reaching 0.6118 US dollars. The British pound declined 0.6% against the US dollar, reaching 1.2503 US dollars. The Australian dollar rose to 0.6750 US dollars, with most parts of Australia observing a holiday, resulting in quiet trading. The Euro-US dollar paired increased by 10 pips to 1.0759. The USD CHF rose by 53 pips to 0.9086, and the USD CAD rose by 27 pips to 1.3367. During the Asian session on Tuesday, June the 13th, spot gold experienced narrow fluctuations and was currently trading near 1956.60 per ounce. Market sentiment remained cautious ahead of the release of US CPI data and the Federal Reserve's decision. A New York Fed survey showed that the US one-year inflation expectations had dropped to the lowest level in 2 years. Market expectations suggest that the May CPI in the US is likely to record the lowest growth rate in nearly a year and a half, supporting expectation of the Federal Reserve pausing rate hikes and potentially providing an upward opportunity for gold prices in the short term. However, the market anticipates that the Federal Reserve may hawkishly skip the rate hike this week. The overnight US dollar index hit a low and rebounded, with US bond yield rising, which still raises concerns for the bulls. The US May CPI will be released at 8:30 p.m. Beijing time on Tuesday, while the PPI reading will be available on Wednesday evening. The Federal Reserve will announce its interest rate decision at 2 a.m. Beijing time on Thursday. Even if the statement leans toward a hawkish stance, the decision to pause rate hikes is expected to drive a significant increase in gold prices. The monetary policy meeting of the Federal Reserve, European Central Bank, and Bank of Japan will set the tone for this week. Market participants hope to obtain clues about future interest rate paths from policymakers. On Monday, the US dollar index briefly fell by 0.29% to 103.24, reaching a new low since May 23rd. However, it recovered from the decline by the end of the session, closing at 103.63, with a gain of approximately 0.09%. This put pressure on gold prices on Monday. However, during the Asian market session on Tuesday, the US dollar index experienced volatile weakness and has now retraced the overnight's gains, trading near 105.55. From a technical perspective, the US dollar index is facing resistance from short-term moving averages, indicating a potential further downside risk in the short term.